Hello, Warriors. Everyone ready for the inflation numbers? Alexander, Sinatra.
Morning, Coach.
Morning, Stel. How are you?
I'm very good, thank you.
Okay, so
Morning, Dale.
how are you, K-Man? Always great to hear. Always great to hear your voice. So
all good. Ready for the next most important data point of your life.
Of our lifetime, yeah.
Exactly.
So little gap up in VIX. Finally had an up day. So that's what I talked about yesterday. So that's a signal. And then, VIX starts closing back under 2073. You get out of it, whatever derivative you use. But we'll see. I don't know. My instincts tell me it's going to be a friendly number for the market.
Define friendly.
Lower than expected.
Lower. Yeah, could be.
Yeah.
And good morning.
Good morning, guy. Hey, how are you, Blake?
Hey, and I just want to say, I think you're exactly right, and I think the FX market is pricing that in right now.
Yeah. Like euro.
Oh,
maybe
yeah,
we're gonna get it.
Euro's running up towards resistance. I mean, it's going to do that if everybody assumes that the data is going to be weak. So I think the risk is that it's not as weak as everybody expects.
Right? Yeah, could be. So I don't know what there really is to talk about until the number. If it's a good number, maybe the S&Ps make another run to 4,200. I think you fade a good number. Let the market rally and sell into it, scale into it. That's what I'm thinking of doing. And I have a couple of areas that if it is a hot number for on pullbacks, I think 1750, 1740 for a pullback in gold to probe longs on a correction. And actually came up with this line. I don't know if it's going to be a magnet or not. It's off this low, which was a nice rally, and this one took us to new highs and comes in around 1920. I would definitely be a buyer there. What makes me think it might happen is some of the silver shares look like they could be vulnerable. Like this was the one I was still in, but it looks like they're set up to pull back, not make new lows. I'd buy a break down here in these, and the silver shares look like they've already begun to put in some kind of correction. So 1920 in silver over the coming days is an area I'm interested in, and 1750, 1740 gold. And they're down with the dollar weaker. So
yeah, we'll take a big beat on CPI, I think, for us to get there, but it's possible.
Yeah,
it's possible.
Yeah, so everything can happen. That's what I always go into these things with, anything and everything. So there's really no surprise. But like I just said, I have a couple of areas that if the market moves to them, I'm not going to have to think about what I'm going to do. That's a difference with the plan. You don't have to think and analyze on the fly while the market's there, and then you start thinking about it and it gets away from you. You're ready to act by pre-planning entries, and of course, what you're willing to risk on that entry, and don't forget, and what are you looking for when you're right? So to get good R to R's. So,
Dale, one thing. Sorry to interrupt. One thing I wanted to add on the CPI is I said this on the flow show as well. We're expecting a CPI year-on-year drop from 9.1 to 8.7. I think that if we drop not as much as that, but we still drop, the market's going to like it. So even if we go to 8.8 or 8.9, the market's going to probably say, "Oh, look, we're turning," or we may be turning. So I think the risk off will happen only if we get really close or above to the previous number. So any kind of a turn lower, I think, is going to be met with happiness from the market, let's say.
Yeah, you don't think it'll be a move to fade? Like say S&P's put on 50 handles in the next, during the session here. To you, that's wouldn't be a selling opportunity.
Yeah, a rally towards 4,200. I think on a number like, if we get, let's say, a number which is lower but not as low as the expectations, I still think we're going to rally. And yes, if we get anywhere near 4,200, I think it's probably going to be a good fade.
Yeah, because I don't think it'll confirm.
Yeah,
momentum won't confirm.
Yeah,
up here.
But as always, it's going to be volatile either way, and you have to be extra careful with position sizing. And I always advocate taking smaller positions when things get a little bit crazy. So that's what I do anyway.
Well, and if it is benign, the people that are saying you can't be short the dollar until it takes 105, takes out 105 this low. This so far was a pretty weak rally unless there's another leg left, like A, B, C for A, and this is B, and then we get C. But otherwise, we're going to take out a 50-day moving average and be under 105. I think the dollar is vulnerable on that. So I think they're going to have their uptrend. I think this is the bulls' last rationalization, I think, for a while. I don't think they'll want to start buying dips until, maybe we're at 100 or something. So I think this low is very important for the bull case. You guys agree?
Indeed. Yeah, I think that low is pretty important there. Yeah.
I mean, I think it was a daily uptrend and everything.
Oh, for the dollar?
Yeah.
Yeah. Let me, do you mind if I take the chart? So like,
you don't even have to ask, boss.
Come on now. I know, so, you got a lot of great charts that you like to show us. So I don't want to just.
But you know me, I used to be able to talk for an hour. Now it's 10 minutes is, it's a marathon. Marathon.
Well, the good news is you got Ben Maldonado coming up today, and
it should be epic. I mean, Epoch.
He's great. He's Epoch. Yeah. It's Epoch Cycle.
Oh, I thought it was Epoch. It's gonna be. Don't miss it. It will be Epoch.
But this is that support that we've been referencing, and it's also channel support as well. And we're coming into that support zone for the dollar index. I agree with you. I think it's super important for the dollar bulls to hold. And I'm gonna defer to K-Man and Stel and see what their thoughts are on the dollar. But Dale, before we even do that, I missed maybe what you were saying because I was chatting with people in the ForexAnalytix chat room. But you think today's data is going to be weak and we're going to see some continued dollar weakness? Is that what you thought? But you want to buy the dollar buy the dollar on a dip?
Yeah, I don't think I'd rather it not be, or regardless of the news, I'd still rather try and buy a break if we get that pop that I thought and Stel thought still might happen. One more pop and be able to buy euro under 101. And Aussie looks like, Aussie looks great, but maybe it's going to try that line again, Blake. It could one more time down there.
Last week I sold it at 70 cents.
That was a great trade.
Oh, it was like 20 pips, but it was, it was just, selling it up there and then I took it off. But I really would like to buy the Aussie dollar a lot cheaper. And I feel like there's one more dip, coming around.
That's what I think is a possibility.
Yeah.
I think that'll be the last time if it tests that line, and if it breaks underneath the line, that's a different signal. But I think there's one more test left. Or I'm just talking my book because that's what I'd like to do. That's
Well, yeah, I don't have any Aussie exposure right now, but I would really like to buy it lower there, and I feel like I would be missing the boat if I have to chase it higher. That's what I don't want to do, but at the same time, you
just have to hold your nose sometimes, don't you, Blake?
Sometimes you do, for sure. Now I want to ask K-Man, really quick. K-Man, what are you going to do here? Because, I look at the dollar yen and I think we're boxed in. And the good news is I think the dollar yen is set up perfectly for a breakout today. Perfectly.
Yeah, exactly. We've been pegged for a while around 135, and the break each zones are clearly 134, 35, 40, and then a first one around 135.60. So those two levels are pretty clear. I think I tend to agree with everybody. I agree with Dale. I don't think the dollar is dead just yet. But I also think the market is really hoping and now expecting a softer number, possibly trying to call a peak in inflation, and risk may shoot if the number indeed comes out weaker. And gold is on a very interesting level. Steve pointed out of a trend line from the highs, which is now coming in right around here. Right around this 1786.87, and that's one that I'm going to keep a very close eye on. And the other one being the dollar yen 134.35.40 is also a bit of a neckline, from the inverted head and shoulder. So there's a few things coming together there. They might be, in a way, sort of the cleanest trades, in my opinion. Those are the two main ones, and then I'm just watching this dollar rand come off, and I'm actually a bit disappointed. I'm not part of it. I didn't think it would go that much lower that fast, but it's been breaking since the 1660s, and without even looking back.
This morning
I think we're going to find sellers on rallies there in the dollar rand. Anything around 1660, I might be interested in selling it if we get it up there.
All right. Well, thanks for pointing that out. The dollar rand has been one of those head scratchers for me because it's held up so well. I actually expected this move lower, like really over the last couple of weeks, because equities had such a nice healthy bounce from the lows and it wasn't participating. And it's like now it's participating and it's starting to roll over as you've had the S&P already generate a 15% move off of the lows. So that's been the little head scratcher to me. But I think a lot of the moves that we're seeing right now is positioning, jockeying ahead of the data. You have to expect that right now the market is anticipating a weak piece of data, because you can see clearly that the dollar is weakening across the board. You got the euro, that's breaking higher out of this triangle. It's kind of, it did it yesterday, but it's really been holding, and we're heading towards the upper end of this range. You have the sterling that's trying to break a descending trend line. You got the Aussie dollar, as Dale pointed out, it's making its way higher. And actually, you can probably do something like this too. You can see, the Aussie's getting close to trying to push back, above 70 cents. You got the Kiwi that's been holding up pretty well. It's been very range bound in this ascending channel. You've got the Swissy back down towards some pretty key support. The dollar MEX is at support right here. So you can see the dollar is really threatening. It is, minus the yen. I think the yen is, the exception to the rule right here. But everybody should know that the yen really does its own. It's on its own schedule sometimes. So, but the dollar is really showing some weakness this morning, as everybody is anticipating a weaker data. So what's that going to do to precious metals, Stelios? We get some weak data today. What's going to happen in the gold silver market?
Well, weak data means risk on, which means metals go higher. And gold, we saw, and Steve showed that trend line on the flow show. We're very close to that, and if we do get weak data, then it's a definite break higher, and the rally would probably have legs from there. So yeah, I think metals rally on weak data. I think that makes a lot of sense, and it's almost a guaranteed thing.
I've got to point this out with gold. Just for those of you that are trading gold, you know, if you're out there getting long, if you take the high, and this is like from June, right? It's end of June high to the low. It's the last leg. This is the last down leg. You can see it's very clear. The last move lower here. We're at the 618 retracement. Let me get rid of this green line because it's taken away from the red. You can see
1803.
Yeah, it's 18. It's basically 1800. You know, roughly 1803. But you can just say 1800. That's going to be a pretty key resistance today. And you know, following the data, you could overshoot that pretty easily. It's not, you know, that's not like some like you know, shield in the market that's going to reflect prices every time you get there. But it is going to be a level that I believe if we close above it at the end of the day. So by the end of the day, if gold's, you know, closes above 1803, I think the next stop is easily 1837 or maybe even 1850, somewhere up here. You're going to see, you know, gold surge, you know, towards resistance up here without much of an issue.
There's also a 3 drive up there, Blake, if you like zoom in a little bit on this.
Oh man, are you going to do the 1, 2?
No.
Would that be a 3 drive to a reversal?
Yeah, but you don't start it from down at 1700. You just go the first high, right? The first high, that's 1, pull back, then 2, up there, pull back, and we just made
like
a
that?
3. Well, that'd be like 25 drives to a top.
Hey man, I'm still trying to figure that one
Stelios
out.
once said, yeah, it's a millionth drive and
And
off the cliff.
okay, well, gold. I just, you know, we'll see if it's if we're gonna find some resistance up here. You know, we also have this ascending channel, but silver. You know, I blogged about this the other day. I actually thought silver was gonna break higher, but we could not break this trend line. Now, that's not saying that we can't break right now. This is last night's analysis. That's why I'm getting rid of these. If you want to, just for those of you that don't see this stuff, if you're not, you know, if you didn't invest the dollar to see the ForexAnalytix analysis that's written for you at night, there's the chart, and we were identifying that trend line right through here last night. But silver, you know, is really struggling here. But if we can break it, if we can break this, didn't you say 2075? Was it you, Stelios, that said that? Anyway, that's that's some pretty big. Maybe it's the resistance. Maybe I wrote that 2 days ago.
Yeah, there's big stuff at 22.5.
I wrote that in the blog post, so a couple of days back. So yesterday's high was at 2072, I think it was.
Yeah.
So it's right there. So if we break that 2075, 2080 level, I think that puts up the next leg
off to the races.
Silver. So I guess the reason why I'm pointing all this out with precious metals, because these are pretty big levels with precious metals. So if we get I know what most people think when we get data. Like, let's say the data comes in weak, your initial gut response is weak data, dollar sells off, I want to buy it, right? It's like, I'm going to fade that news. That's what most traders say. I guess the point I'm trying to bring up here is we have some pretty key levels that might break in whether you're talking about silver or gold. I don't know if you really want to fade those, right? Like, I mean, let's imagine silver breaks this resistance at the 618, you know, or that was gold, excuse me, and silver breaks this resistance right here. Do you want to fade that data? What would you guys say? Like, K-Man, you know what I'm talking about, right? Data comes out, the first gut instinct of a trader is to fade it. We might have lost K-Man, but anyway.
Hang on, because the smoke. I didn't understand what you were saying because you're not very loud.
I'm sorry. What I was saying is on the data, and let me go ahead. I'm gonna fix something really quick. On the data, if if the data comes out and it's a little bit, let's say, weaker than expected, and the dollar, dollar drops, the immediate gut instinct for a trader is I'm going to fade that move, right?
Yeah.
But if you're seeing gold and silver break some pretty key levels following the data, are you going to fall into that trap?
Yeah, no, not really. I really want to see. Well, the metals is one thing, and then I want to see what the yields are doing really before jumping into any conclusions. There might be a few saloon doors coming up if the number is weaker, but not too weak. We may see this kind of knee-jerk reaction. It's a tricky one for me today, I must admit.
Okay. Well, and plus you've been out on holiday for a little bit, but let's talk about equities. And I was having this conversation with one of the traders in our community, and we talk privately as well. And he's like, man, too many people are fading this, trying to fade this rally. As we come out of this ascending wedge. And I kind of agree. I mean, everybody's trying to pick a top in the market right here. And I'm not saying that it can't happen. I'm just saying that I need more convincing. And what that looks like for me is basically I need to see a move below 40.80 in the S&P for me to even think that we have a shot at moving lower. You can see yesterday specifically, we sold off, came out of this wedge, but really did we sell off? I mean, I need some more convincing price action to be convinced that we are, resuming this bearish trend. What do you say, Stelios, regarding that?
Yeah, I agree. The macro picture is definitely still not good for equities. So we still have rates rising. The question is now what's happening with with the Fed, and obviously today's CPI is a huge point to consider. But on a macro level, it makes sense to be short or to look for lower levels. But in the short term, if we get a weak print, it's definitely going to go higher. Risk is going to get bid, and as I said before, I think towards 4,200 in the S&P is probably a very nice area to be attempting a short, unless the print is very, very weak, in which case I'm never going to get in front of this. But if it misses a little bit and we edge towards 4,200, I think a short is probably not a bad risk reward with a pretty tight stop above.
I still think that it's possible we see the 200-day moving average. I know I've been saying that for the last several months, from us being down here at these levels, that we'll eventually make it up here. But now that we're getting kind of close, like I said, I'm nervous shorting the market here. I'm nervous on the short side. I feel that the short side is like not paying. And if you are leaning short, you're probably thinking the same thing, like, holy crap, I'm not really getting paid to be on the short side. But imagine weak data today, is going to, weak data is going to allow the Fed to pull on the brake, put on the brakes a bit. So, it's going to be, and that's from putting on the brakes as far as, continuing to raise rates as aggressively at, 75 basis points a clip. So look at the NASDAQ. I think the NASDAQ's a very telling story here. You can see how we're holding this breakout point in the NASDAQ futures. Well, this is the NASDAQ 100, so just keep that in mind. The Dow also very resilient here. Let me get rid of this. I don't think this is important as of right at this moment. And matter of fact, let me get rid of this purple line. That's not very important either. But what you can see is, the Dow, again, very resilient. Not much of a pullback here. So, Dale, how do you feel about equities here? I mean, they've had a nice push. Are we going to go lower?
I'm looking for a pullback to 39.20, then a rally to your 200-day moving average. But I think the most significant thing that's happened in the past couple of weeks is I always contended it was going to take a dollar peak and a dollar bear market to really be the jet fuel for gold, especially because it's a monetary metal, and for silver. And there's never been a bull market in silver without a weaker dollar. And the evidence is starting to show that that's more of a possibility than it was a month ago after this first break to 105. So this could all just be beginning. If the dollar is peaking, you almost have to be long everything because nominal values will go up just because of a weaker dollar. So I think that's really what is igniting the metals is the fact that the dollar might be peaking here.
All right. Yeah, I'm not in disagreement there.
Yeah.
And Angie asked, like, hey, is this market mid-range before the data? If you guys have been, longtime listeners of these broadcasts, as here on F.A.C.E for the last 6 years, or the decade ahead, or prior to that with me on the Morning Edge, then you know that when important data like today is coming, market's going to be mid-range. And the reason why is you get an equilibrium between buyers and sellers ahead of data, because it's like you heard K-Man, it's tricky. Right, today's data is tricky, and the outcome today is going to be tricky as well. So you take, the dollar yen, for example. We know that the range is between 134.50 and 135.50, and we happen to be smack dab in the middle of that range right now, ahead of the data. Probably one of the most sensitive currencies, and we'll have it up on, well, actually, I'm going to actually just keep it on the dollar index. But one of the currencies, I'll switch this over to the dollar index that I'll have on, but one of them that you may be watching is the dollar yen, because that's going to be one of the most sensitive, reactions is going to be right here. Matter of fact, we might actually just leave it on the dollar yen. I'll watch the euro on one of my other screens, but that's mid-range. S&P, she asks, is the S&P mid-range? You could probably argue that right now, that because I would venture to say this, like if you asked me about the S&P, I'm going to tell you, if we break above these highs, we're going a lot higher. And if we break below this low, we're going to do exactly what Dale said. We're going to see lower levels. We're going to see a lot lower levels to that 39.20. So I think you could argue that we are mid-range right now, waiting for that data. And so, I'm going to say this: if the S&P starts breaking above those highs that we set, was it yesterday? I would not want to be on the short side of the market. I know we have resistance right here. I know it's 4,200, but I wouldn't want to be caught on the short side if we start breaking those levels. Tony said it's very hard to hear me. Can you guys not hear me?
You know what? You did get louder in the last few sentences than you were prior. I don't know if you move away from your mic. You have one on the desk, so sometimes I think maybe you're moving away from it.
Yeah, I think what it was is I actually moved a little bit too high there. So what I'm trying to say here, and sorry about that, sorry about my microphone issues, is that, and hopefully you guys can hear this all right, is we are mid-range. We're finding ourselves very much in the middle on the S&P. A break below the 4080 level is going to be quite bearish. A move above this week's highs, or that 4180, I don't even think you're going to want to stand in front of that. I think we will see, much higher levels after that. So you'll get caught in some sort of massive squeeze here on a weaker, a very weak reading of CPI. So we're about 2 minutes away. And what do you guys,
a minute.
You guys have? Oh, it's a minute. Let's see here. Oh, we are 1 minute away. All right. So let's go ahead and grab the 3 different charts that we're going to look at. And this one, we're going to turn over to the dollar yen. And we're going to put it on a 15-minute chart, guys. Sorry, I'm going to just make a couple adjustments here. There's your 15-minute chart. We got a 15-minute chart of the S&P. We've got gold right here. And then I'm going to go to ForexAnalytix. And you can follow along in your data flash. So here it is. Let me move that out of the way and then bring it back. All right, we're going to put it right here so we can see that data. You guys ready?
10 seconds.
Ground control to Major Tom. Ground control to Major Tom.
I missed Bowie. Okay.
Weak data.
5.9.
Sterling is actually ripping. Oh,
And
the euro
8,
just
yeah, it's
popping.
weak.
Whoa, woo, woohoo.
Oh,
Look
my
at that.
Lord.
Wow. Well, see, the market was leaning into that data pretty good.
Yeah,
And
yeah.
as the euro reaches for 103, we got to be careful here because the dollar yen is breaking lower. Wow. What's the data look like, guys?
Well,
Wow.
both CPI and core CPI lower by 0.2 than expected, and most importantly, the CPI is 0.6% lower than the previous print. So the Fed is going to definitely look at that as a potential turning. Do you think somebody had this data before?
Well, yeah, I mean, it was just weighing.
It traded
right
that
into
way,
it. I
right?
mean, it's just crazy.
Traded
Yeah.
that way.
So the euro just hit 103.10, and wow, what a move! What a move! Let's see, 103.15. We're trying to break that 103 level.
Yeah.
Like I said, the market was leaning into this, and we got it. We got the weak data. Look at the S&P screaming back up here towards resistance. So just keep that in mind, guys.
Silver 2070, so the level you talked about. Yeah.
Yep. Hold on.
Gold
I'm just doing
1805.
something really quick. Wow, the euro's at 103.25. Holy cow. Well, up there momentarily. And silver got to where?
2070. You were talking about that level, right? Or was it?
Yes, 2070, 2075.
Yeah, there we go.
It's interesting that we're not able to break that just yet.
Well, it's still up 1%. So, okay.
Yeah, we'll see if we can build on it. So weak data. Let's see if stocks can actually follow through. K-Man, I think he's probably on the desk right now. We are above the resistance. We're at the highest levels of the week. And K-Man, you have any last minute?
Yeah, I mean, fierce break of the dollar yen there. That's up 134.35.40. I managed to leave a stop entry in there at 134.30 and get done. And yeah, gold is looking as if we are off to the races now. As long as we stay above 1785, I'd say this is positive, right?
Yeah, I mean I think it is too. So you gotta imagine that it is. Let me see. I'm just kind of taking a real close. I know Ben's going to be jumping on here. Do you guys see the dollar CAD? Holy cow, that thing really, really pushed lower here too. It's broke through all sorts of support. Anyway, all right, guys. I'm going to let you, Dale, I'm going to let you take over. Thanks, everybody, for joining us. Make sure you check out the Trader Funding Program. You want a good way of joining our community? Trade our money. And go to the Trader Funding Program to learn all about it. I'll put it in the chat box for you. There you go. And Dale, have a great interview with Ben Maldonado. I always love listening to him. I'm going to stick around so I can listen in. Stelios, K-Man, thank you guys all.
Thank you, everybody.
Good luck with that silver move, buddy.
Thank you.
All right.
All right. Hey, Ben, are you just Ben in purple? Is that you? I don't see your last name anywhere. Can you raise your hand?
It's either him or Ben Kenobi, so it's one of the two.
Okay, that's him. All right.
Ben with two N's.
Got you.
Oh, yeah. There we go.
Trying to promote you. There you are. Welcome back, Ben.
Mute. Hey, can you hear me now?
Got you now, Ben. Welcome back to F.A.C.E. And what an epic day, an epic number, Epoch Cycles. Looking forward to hearing your update on your narrative, bro.
Hey.
Hey, how are you? Good.
So we are ready to go.
Yeah. So you want to share your screen?
Yeah, let me share here. And then we'll get the presentation up. Always try and prepare it for you guys. There we go. Can you see it, Dale?
Right now, all I see is You and me. Did you hit share screen?
I did. Let me try it again. Let's see, I'm trying this on the laptop, so let's see if this works.
There you go.
All right, now let me get the presentation up. There we go.
Yeah. Okay, Ben.
So yes.
Yeah, you wanted to come on because you have some inflection point a week or so away, and wanted to update people. Since we last talked, we did have a pretty good drop and sell-off correction in commodities, and a few of them have already begun the upside moves like gold and silver.
Yeah, I think we're getting another shot at commodities with this correction, and it's a big opportunity, and we'll talk about it in the presentation. I reached out to Dale, I guess it was last week or the week before, and said, hey, if you have any space or any cancellations, get me on, because we're in a really big time window in my cycle work that is happening right now in this month of August. And I said, it's a good time to come in and talk about what's going on in these cycles and what's going on in the markets, and how we can position ourselves to, number one, not get hurt, and number two, potentially benefit. So today we'll run through this agenda. We'll talk about the major cycles. My analysis sort of starts from a big picture cycle work. Then I go down into the fundamentals and say, okay, do fundamentals support this? Are the trends in an industry or what's going to benefit from these bigger cycles? And then, get into the charts and look at the technicals and the geometry. So we'll do a little bit of all of that today. The major cycles that I work with right now that I think are governing events and what's happening in the world are the Epoch Cycle, which is a 400-year cycle, and then the 70s analog that we are experiencing, sort of a repeat of the 70s. Flashbacks, right, Dale?
Yeah.
So let's go to let's jump in and start reviewing the cycles. The Epoch Cycle, for those that haven't heard my talks, it is a 400-year cycle that was responsible and is responsible for sort of the formation and the development of the structures, the organization, and the institutions that sort of govern our world, and sort of how we operate and get by and support ourselves and take care of societies. It's all been put together over 400 years. We're in the very end of that cycle, last 4 years, as a matter of fact. So, when you're talking about a 400-year cycle, 4 years is a tiny piece of it, but it's an important piece, because what's happening now is we're in a dissolution phase where people are losing confidence and trust and belief in organizations and structures that they once relied on, believed in, and depended on. You hear this term, the Great Reset. Well, my take on it is that this is what the Great Reset is. This is the real Great Reset, is we are in the process of breaking down and dissolving these major organizations and structures. I mean, they're falling apart before our own eyes, and you can see it, and we'll go into the sort of the next slide, which talks about specific examples which everyone can relate to. The other thing, the new thing that I've sort of added to this is that we've really had a run of poor leadership, not just in this country, but around the world. And the poor leadership that we're experiencing is creating even more issues. It's creating fear and insecurity in people, and it's causing confusion, and you can see it every day. If we had better leaders, this transition may have been and may be more smooth, but we haven't had great leaders, so it's only exacerbated the problem. These are the ones that I've identified.
Ben, would a strong leader have ordered Nancy Pelosi not to go to China and stir up a hornet's nest?
You know, Dale, I don't really know. I'm kind of mixed about that. I think in a way it's good that she did it because, you know, we've sort of been in an asymmetrical war with China already, and she basically confronted them, which again, depending on your politics or where you are in this thing, I don't think it was a bad thing. But the fact that, you know, they said don't, the leader says don't go, or the leadership says don't go, and she goes, is again another example of ineffective leadership. Like if you're gonna say don't go, she better not go, or you better say it in private to where you don't look weak. So I just think it's another example of poor leadership.
Okay.
On the epoch cycle here, here's some that I've identified. We've gone over these before. The one in yellow I threw up there because I think with the recent events this summer, the leak and then the decision in Roe versus Wade.
I thought about you with that leak.
Yeah, absolutely. I mean, think about it. This is, again, another example now where at least 50% of the country, at least, thinks the Supreme Court is illegitimate now, doesn't have any basis, needs to be dissolved, needs to be changed. And this is something that we've depended on in our history for, you know, all the history of since we've had the court. It's been sort of this bastion of, okay, they're impartial adjudicators of the truth. Well, that's gone. And I think it's, again, another example of this epoch cycle where things are breaking down and people's belief and faith in them is waning. This is an interesting site I found that I thought I'd throw up because I think this is an example of the effect of the epoch cycle. This is a global protest tracker, and it shows numbers of countries and things that are going on where people are rebelling against their leaders or against institutions or against sort of formal organizations. The big one here, 78% of authoritarian countries are facing protests. And I think part of the reason that's happening is as we transition from this epoch cycle to the one epoch cycle of 400 years to the next one of 400 years, we're moving away from this centralized power structures to more distributed or individual sort of tribal type of power structures. So people feel it and they know it, and they're rising up against it. Here's
it seems to me, Ben, that there's still a rise in the trend of authoritarianism, that there's more and more of it in the world, where I can't see anything tribal. I just see more and more government control rather than decentralized.
And it makes absolute sense. I think you're absolutely right, Dale, and it makes sense that the authoritarians and the power freaks and the control freaks are going to grab for more power because, you know, on some level, they even sense that it's breaking down, right? Their power is breaking down. So what does someone do when they're at the end, right? You're desperate, you grasp for it, you extend it, you increase it, you try desperately to hold on to it. And I think that's what you're witnessing. It's sort of the death throes, you know, the violent death throes right before you give it up, because we're in this last period where the cycles actually do still support that centralized power, but it's waning rapidly. And in 4 years, it's gone. There's no more support for that kind of power structure.
Okay.
This is specific.
God.
Yeah, I mean, thank God is right. We want individual freedoms. So here's this is interesting too. On that same site, I pulled out places where there are economic protests, you know, related to inflation or prices of food or things of that nature. And I highlighted the ones in purple here are where it's all about rising prices, economics, or food. And those are major themes that we've been talking about this year and the previous year. And I think these things are going to continue. And I do also believe people are going to continue to rise up against it. The other major cycle that we're dealing with, the one that's, you know, and someone may say, well, you're talking about a 400-year cycle. How the hell does that help us in trading? I'll get to that, how we can use that 4-year cycle and sort of the destruction and the dissolution of these power structures to our favor. But this is one where there's specific analogs we can look at. There's specific things that are going on that are directly related and connected cycle-wise to the 70s. It's not an exact repeat, but man, it's sure rhyming. We first started off on this a few years ago, comparing Nixon and Trump and all the things they did and the commonalities. Incredible, right? Down to the point of where we've had 4 presidents impeached, and there's 2 of them, right? One in the 70s and one in the present day. So this is a really, really strong connection with this 70s cycle. Currently, what we're going through is Jimmy Carter 2 with Joe Biden. The most recent one, and when this decision came out, first thing I did was I said, I know Roe was in the 70s, but when exactly was it? 1973.
Huh.
January of 1773, Roe versus Wade was decided by the Supreme Court. And just this summer in 2022, Dobbs versus Jackson overturns it. You know, again, a really strong connection that gives me even more confidence that what we're going through now is a repeat of what happened in the 70s. It's not exact, but there sure are a lot of similarities. And Dale, you've picked up on this, and you've brought up things and brought it to my attention offline and on different shows. You can see the connections and how they happen.
Yeah.
This is
you even found monkeypox,
which is crazy, right? Monkeypox first appeared in 1970, and now it's
where in
back
Africa.
again.
Where was it? The case first.
I don't remember. I don't remember exactly what country it was, but it was in 1970 where it first appeared in humans. This is a new slide that I added and a new connection. When the Roe versus Wade and Dobbs versus Jackson connection was made, I said, let's go back and look at what was happening around that time in the markets and sort of see if we're following any patterns or if there are any connections. The interesting thing here is I did make the connections. 72 was like 2021 with a strong up year in the markets. 73 has been like 2022 has been so far, where we've had a sharp down, a rally back, sort of distribution, you know, the initial sort of growth shock that has come in. And 74 is connected with 2023. And as you can see on the chart here, 74 starts right in here. So my contention is if we continue to follow this analog and the cycles that connect it, we're near a high. I think we can extend. I think we can extend, you know, the high. I'm expecting the high in the next week or two, if it hasn't already come in. And then we're going to roll over and have the first sharp down move, which I'll show you the timing on the next slide, you know, how they connect up. But we're looking at, this is what I'm calling sort of the recognition wave, or the terminal wave, where we're going to really start taking out levels and really start seeing some acceleration to the downside, have a little relief rally, and then here's the panic into the lows. And this analog, if you're looking at it, is from 1973 to October of 74 when we got that low. And here's the sort of the speculative timing I'm looking at for that. If that connection sticks, and I put this out in June. August 22 is when we're expecting the high, and it looks like we're getting it. It's going to come in here somewhere, probably higher than most people think, including, you know, you and Blake and all have talked about it. It's based on positioning. It's also based on, you know, they got to squeeze everybody and get you wrong-footed before they move in the proper direction that they really want. So, and I think that's what's happening here in the month of August. January of 23, I expect that first low, the sort of a swing low.
Wasn't it Chris Carolyn that also had some type of cyclical low in January. I remember I was doing an interview and you said, I think you were in the room, and you said, well, that's where I have my penultimate low. Do you remember that?
I don't remember his swing there. I remember his low was in July of 23. So, and which is not far off from mine. Mine's in August.
Oh, okay. All right.
So, but
So
I do think
that was probably it then.
Yeah. But this, this path is a speculative path, but I think it's one to watch. It looks like so far we're following it pretty well.
Where do you think the low will be in the S&P at the low? Have you ballparked it? Where you think?
Yep. We're going to get to that. I got a couple slides for you.
All right.
So the one thing about, this talk is not going to be, all sunshines and giggles. I'm going to tell you exactly what the cycles are calling for and what we're looking for. And it's not good for the next sort of year and a half, 2 years. But the key thing I think that we have to look at is if you protect your capital and if you invest it properly and you have the money at the lows, you're going to be in a position to create generational wealth for you and your family. I do have optimism for what is coming after we get through this bad spot. If you look at history, and again, connections to the 70s, we had Nixon, Carter, and Reagan. Reagan and that era and that time frame brought in sort of a renewal in America, and America became strong again. Business became good, the economy became good, and people in the country became wealthy. Right now, we've gone through Trump, Biden, and we don't know what's coming next. But we can have hope and we can have optimism that whatever system that comes out of this dissolution and this destruction that's happening now is going to be better. It's going to be better for everyone. And so that's the hope. Let's see how it plays out. But that's
is it going to be like that guy Klaus? You're going to own nothing and love it?
No, I think the authoritarians like Schwab and the other power grabbers right now are going to lose. And I don't think they're going to lose because it's what I want. I mean, that is what I want, but that's not the reason why. I have to look at it objectively and say they're trying to do things that are not going to be supported by a major cycle that governs, the entire globe. Yeah. And so the things they're trying to do, while they may work in the short run, after 2026, there is going to be no support for them. They're going to crumble. They're going to fail. And probabilities favor that they're going to fail. And the business that we're in is the business of probabilities. If you're trying to swim against the tide long enough, the tide's going to eventually win. And cycles will win. So that's why I'm confident and do have optimism looking out 3-4 years from now or 5 years from now, that things will be better. It's just going to be bad and rough for the next few years, and we have to know that and sort of step back, prepare for it, and not get emotionally involved when we see all this stuff going on. Just know it's part of the plan, and you ride with it.
Okay, so the market's going to bottom a year from now,
approximately. Yeah.
Okay.
That's what I'm looking for.
Okay, but the Epoch cycle runs another 5. So even though the market's bottoming, there's still some things to be paid for.
There's a lot of chaos that we have to go through, right? A lot of chaos, because we have to basically break down these big structures and big systems and create something new that's smaller and more tribal. Time. Yeah, it's going to be smaller, tribal. How it's going to play out, who knows? But it's going to be different. This slide I just threw up because I wanted to talk about the themes that I addressed when I was on with Dale first part of this year. I think it was late January, early February. We talked about limitations and shortages. We've certainly seen that. The myth of eternal growth being shattered, that hasn't happened yet. But what I'm contending is that's going to be tied to the next leg down in the markets. Because what we've seen in the markets in this first leg down that we experienced was companies that weren't earning any money, had no prospect of earning any money, which were bid to the sky, have been crushed. I mean, they're down 50, 60, 70, 80%. SPACs got killed, cryptos got killed, all the crazy stuff that said, oh, we're going to grow and things are going to great and things are going to be coming, it's going to be fine. That's gotten taken care of. Next is, the valuations on companies that are producing earnings and are growing are going to start getting ratcheted down as the growth that people are expecting doesn't come. And this myth of eternal growth, I think, is going to be one of the catalysts for the next move lower. And that's what I'm looking for there. We certainly had volatility, power, might, and violence. We've seen that with the people in power. We certainly saw it with the war in Ukraine. So, and unfortunately, those themes are going to continue.
When does China invade Taiwan?
It's a great question. I would say, if I was a betting man, it would be during the time in which this administration is in power. So put your time frames on it based on that. In the next couple of years, they're going to do it.
Yeah. Okay.
The background that we're operating now is with a hawkish Fed. If you don't get that and don't understand that, you're going to be in trouble, because for the last 13 years, the Fed has had your back if you've been in risk. It's not true anymore. And you have to realize that, you have to accept that, and then your investments will flow, and where you put your money is going to flow from that, because it's a different world. The Fed is no longer supportive of risk assets, and we have to accept that. One of the things that I heard Stan Druckenmiller talk about on one of his talks was, you have to really look at the world. How's the world going to be 6 to 12 to 18 months from now when you're deciding where to put your money? Well, I asked myself that question. I said, what will the world look like based on the cycle work that I do in the next 6 to 12 months? Number one, I think we're looking at economic contraction, recession, not growth. We've started to see it already, no matter how people deny how strong the economy is or how great it is or how this, how that. Things aren't great, and it's going to get worse economically. I believe that inflation is going to remain high and higher than most people believe, especially all the peak inflationists out there right now. I throw them in the same bucket as the transitory inflation people. It's not going to happen. If you have limitations of resources and you have shortages, you're going to have high prices. That's simple economics. We're going to see nationalism and tribalism rise dramatically. There's going to be onshoring of factories. I'm calling it reverse globalization, where everything that worked for the last 20, 30, 40 years is going to be undone, because it's not going to work anymore. It's going to be all about, how do you take care of your own, right? In this country, we're lucky. In the United States, we can feed and meet our own energy needs. Most countries in the world can't do that. And that gets to the next point, which is we're going to see more and more of food scarcity. You're seeing the protests all over the world. You're seeing, governments and countries, economies collapse. It's going to continue to happen. The next one is the scary one to me, the splitting apart and the hostile separation that's going to happen. This is going to be both inside of countries and societies as well as outside. So what does that mean? That means we're going to have wars between countries, and we're going to have wars within countries. Yeah. Anybody that
lock and load statements the other day after the FBI raid.
Yeah, I mean, it's that to me, while disturbing, I step back and I'm emotionally detached from it, and I just look at it and say, it's part of the cycle. This is part of this hostile separation. I hope our country can stay together. Is there a possibility that this country splits up? Absolutely. And it's something that, again, don't get emotionally involved. Just look at it like you're watching a movie, and position yourself and protect your family and prepare. The last one is the one that could be the result of all of this, where it's going to be crisis after crisis, and a sense of hopelessness may come over the people. If you get emotionally involved, the hopelessness will come in. If you can detach from it and watch it like a movie, you can hopefully think clearer and do the things that you need to do to protect you and your families.
Well, don't you have to believe in something outside of the material world when you have this happening in the material world that we've all hung our hat on, our bank accounts, having a comfortable lifestyle? How can you not be hopeless if you don't believe in anything or have faith in anything outside of your bank account?
Well said, Dale. Well said. It's family, it's friends, it's loved ones. You know, those are the things that are dear that we need to take care of.
That's right. Because you know what, Ben? Oh, you have another page. Okay, go ahead.
Yeah. So yeah, I got a couple more actually. I got things to run through. We'll go quickly. How do you prepare? We're in an inflationary bear market. What can you do to protect yourself? You hold higher levels of cash. Not trading, holding on to the money you made in the previous bull is a big win. If you're aggressive, you sell risk. You sell bonds. You buy real assets and commodities. The goal is to have cash and lots of it to buy the bargains that are always present at the bear market lows. And there's going to be generational wealth opportunities in this cycle. You just have to have the cash and be ready for it. You mentioned about price targets, Dale, and where things could go. It seems crazy, but this is possible if we get into this panic, which, you know, if you look at the waves and just count some waves without being a master Elliotician, if we get a wave 3 coming up, you know, it could be fast and it could be furious. I mean, you could see ES end of next summer, 2,000, 2,500, you know, basically erasing that whole move from the pandemic lows.
Yeah, and that would be where the trend line would come in off the low that you have. When was it? In 82 or whatever? I don't know how far back, but your lowest low and then the pandemic low and comes in.
Yeah, connecting those. Yep. Yeah.
I even heard Grantham said that because we have inflation, the market won't go as low because, as we discussed, nominally inflation boosts the price of stocks. So,
right.
You know, it's as low in real terms, but in nominal terms, it's higher.
Absolutely. I think, and remember, inflationary bear markets are the worst kind because not only do you have nominal losses, you get real losses as well. So you got to protect yourself and you got to be ready. NQs could be in the 5,800 to 5,000 range.
What will gold do? What will gold do during this?
Yeah, let's get to gold. Bonds, you want to sell bonds. The reason I wanted to put this chart up, it's not very often you get an interaction with a 40-year trend line, but there it was at the low.
Yeah.
Held the first time, but it's just kind of, you know, creating a little more air before it gets hit again.
Yeah.
I think bonds are going lower.
132 first.
Yeah. Commodities and inflation, you want to own commodities. I've made that case for years now. I just put this there to let you know. Commodities versus stocks. If you don't know this by now, you know, you got to get some help because one's at the high, the other's at the low. That's the time you want to rotate into them. Yeah. Commodities and recessions, we've seen a lot of talk and a lot of concern about, oh, commodities are going to get killed because demand's going to go down. This particular chart shows that, you know, once a recession comes, commodities can actually rally and rally strongly. The initial rally causes a recession, but then once you're in a recession or slightly after the recession, commodities can rally pretty strongly. I think we're in the third inning of the commodity ballgame, if you want the baseball analogy. I think there's much more to come. I have been contending we had an energy crisis in the 70s. We're going to go through, and we are going through, the second version of that energy crisis. There's supply and demand reasons in addition to cycle reasons. There's crude, the pullback on crude. If you look at the chart and the geometry, we pulled right back to an important support level. If that gives away, you know, 74, 75 could be next support, but I believe you're going to see much higher prices in crude in this cycle. Nat gas is something, you know, I've been all over. This thing's been, you know how this thing moves.
Yeah.
We went from 10 to the 5s again, but pulled right back into support. I mean, look at your long-term support on this line here. So nat gas, I think, is bullish longer term.
Yes.
A couple more I want to cover. There's gold. So gold is one of the commodities that everybody's been frustrated with, but look at how it's corrected for the last 2 years. That's a sideways consolidation.
Yeah.
It didn't get crushed like some of the commodities did that I'm going to show you, in the next couple of slides. So I think gold is really, really bullish. Is there a potential clean out move to clear out that triple bottom? Maybe to grab some stops, but this thing's going to be much, much higher. Because remember, gold and silver, while they do well in inflation is not the big thing. They're a vote of confidence in the powers that be. And we've talked about how am I going to connect the Epoch cycle to making an investment. If confidence in the powers and government and organizations and structures in the world is waning and they're getting dissolved, those institutions are being dissolved, that's the proper recipe for a really strong market in gold and silver.
Monetary metals.
There's silver.
Yeah.
Silver's correction, did a nice little ABC down on the monthly. Now it's pushing up, trying to break through resistance. But again, look where we are. We're on top of that 8-year, sideways pattern, that base. Here's one that corrected pretty strongly, but look where it came down to.
Yeah, exactly.
Right to support. The highs in 2017 and 18 were support. That's bullish technicals. So copper looks good. Wheat got smoked after the run up, after the Russians invaded Ukraine, but look where it came back to. Right to support. I'm bullish on the grains. I won't show all the grains, but they're all bullish. If we're going to have problems and we're going to have food shortages, that means grains are going to be higher. Grains are going to be in demand and in short supply. Cotton, here's another one that got smoked, right? Big pullback, but look where we pulled back to. The highs in 2013, 2014, the highs in 2018. Right on support. I think there's a good opportunity in cotton setting up again. In coffee, here's another one a lot like gold. Look at the correction here. It's been a year and a half, but it's basically a sideways correction, a nice little bull flag. This to me looks like it's setting up for the next move higher.
Okay.
So commodities, I think we've gotten our second shot here, after took 2020 getting in them, or 2019 if you got in them and you had the big run up. We've had corrections. We've had, sloppy price action. I don't know if it's going to happen today, next week, next month, next year, but the next move up in commodities is coming. And I think it's sooner rather than later. And that's all I got for you today, Dale. This is just a little YouTube site where we do some videos for people to watch. And then there's my Twitter handle if you want to follow.
And Ben went to Wharton.
Yeah, many moons ago, but yes.
Yeah, so he, he's a pretty smart guy. So anyway, Ben, as usual, thanks for updating us on this, and everyone prepare themselves for hopelessness. And
the key is right to stay detached, right? Then you won't get caught up in all that. It's going to be tough. Things are going to be tough, especially the next year or two. But if you prepare now and you have the mindset that what's going on is part of a cycle, and this with death comes rebirth, right?
Yeah,
that's the whole thing with cycles.
You know what Elvis would say about your call in December, right?
What's that?
It'll be a blue Christmas without money. I'll be so broke, it won't even be funny. I'll have the blues every day, 'cause I've lost all my pay, and I'll have a blue Christmas.
Well done, Dale.
Anyway, so that's what we have to look forward to, a blue Christmas. Thank you very much, Ben. You're my brother, man.
I appreciate it, Dale.
Really
Always,
glad we
always
got
great.
to, yeah, glad we got to know each other, and thanks for edifying our community and, you know, getting them ready.
Yeah, thanks to
Okay.
Blake and everybody at F.A.C.E for all the great content and information you provide. You're helping a lot of people, and that's really cool.
We're all on that common mission. So don't just count your pips, count your blessings, and you know, find some good people to stick together with through the storm.
Amen.
Adios.